Hello everybody, Derek Smith from Comprehensive Credit Repair, and I have another credit repair tip for you today. I'm going to call this the ultimate guide to credit repair. Finding out you have bad credit usually comes at the worst possible time. You might not even know how bad it is until you get denied for a credit card or a cell phone or a car loan, or worse, you're trying to buy your dream home and you can't qualify for your home at this time. When you check your credit report, you may be surprised to find one or several negative accounts tarnishing your score. Or maybe you're not even sure how to interpret all the information that's listed there. Once you figure out what's your credit report and how it affects your score, you can start your credit repair journey and hopefully start fixing your credit. Now, fixing your credit is not something that can be done overnight. Don't let anybody tell you that it can. But at the same time, you don't have to wait years to see improvement. As you start to see that number increase, you'll also begin to notice all of the related benefits that come with having a good credit score. You'll be able to get approved for more credit cards, and as long as you continue to use them responsibly, you have higher credit limits while paying lower interest rates. You don't have to carry the burden of bad credit for the rest of your life. In this video, I'm going to teach you factors that affect your credit score, plus both short-term and long-term strategies for fixing your credit. I'm also going to teach you how to get negative items removed from your credit report and where to go if you need additional help. Let's begin with looking at what affects your credit score. Your credit score is a numerical reflection of all the financial information contained in your credit report that comes from one of the three credit bureaus: Equifax, Experian, and TransUnion. Creditors and other companies send in financial information related to you and other consumers to help build an accurate representation of your credit worthiness. Some creditors report to all three bureaus, while some may only report to one of the bureaus. The information on your report is then filtered through a scoring model to create your credit score. There are different scoring models used for credit scores, but the most popular one is used by lenders and credit card companies, and that's the FICO score. When a creditor reviews your application for a loan or credit card, they'll check both your credit report and your credit score to determine your credit worthiness. Based on that and other financial information, they'll decide if you qualify for a loan or a card or a house or whatever you're trying to get. If you do, you'll receive a higher interest rate if you have poor credit, because they think you pose more of a risk to defaulting on your payments if you have a rocky financial past. When you have excellent credit, however, you get the best terms and conditions that's out there. Clearly, it's important to have the best credit possible so you can keep your interest rate payments as low as they can possibly be. So what exactly is on your credit report and how does it affect your score? Well, let me tell you how it all shakes down. First, you have your payment history. The biggest chunk of your credit score is determined by how well you pay your bills each month. In fact, it accounts for a whopping 35% of your credit score. You'll see this history listed on your credit report through different accounts you've had over the last 7 years. Under every loan, under every credit card or mortgage that you've ever had, you see how much you've paid each month for an extended period of time compared to how much the monthly bill totals. Other creditors like cell phone carriers or utility companies, they can also report late payments, but they typically don't report on-time payments. If you do have a late payment listed, it'll be marked with exactly how late it was, ranging anywhere from 30 days to 150 days, or even more if the account went into default. The later the payment, the more your credit score is going to drop as a result. Let's look at total debt. So next, 30% of your FICO score relates to how much debt you have. Installment loans like a mortgage or student loan aren't weighed as heavily, but your revolving debt, which includes credit cards, is a much larger component. Lenders look at your debt to credit ratio, or your credit utilization rate, which calculate how much you owe compared to your maximum line of credit on your cards. If you're close to being maxed out, your credit is going to suffer. Since it's a ratio, two people with the same amount of debt could have totally different scores if their maximum balances are different. A person with $3,000 charged on a credit card with a $10,000 maximum balance only has a 30% debt to credit ratio. But someone else with $3,000 charged on a card with just a $5,000 limit will have a 60% ratio, and all other things being equal, a much lower credit score. Let's examine the length of credit history. 15% of your credit score hinges upon the length of your credit history, since a lender simply can't gauge your ability or your willingness to repay a loan if you don't have a history proving you've already done so in the past. The scoring model takes into account how long your various accounts have been open, including your loans and your credit cards. Now, unfortunately, rent payments aren't usually included in the FICO score, but there are rental reporting services that you can use as additional documentation in your credit application. Now, let's talk about new credit for a second. Another section you see on your credit report is called inquiries. This refers to each application for credit you've submitted in the last 2 years and can affect 10% of your credit score. Now, each inquiry will shave off about 5 points during the first year unless multiple inquiries were completed for the same product within a few weeks of each other. That just indicates you were rate shopping for a loan or credit card and is typically just treated as a single inquiry. So let's take a look at what we call credit mix. The final 10% of your credit score is determined by the types of credit that you have. Now, I mentioned that revolving credit like credit cards or retail cards hurt your score more than installment loans. Installment loans have some sort of asset tied to them, like a house or a car. Now, these type of loans show you own something of value and are more committed to paying off those loans compared to unknown purchases from a credit card. Student loans are also viewed more favorably than credit cards because they indicate an investment in your future earning power, and the more money you make, the faster you can pay off your loans. Negative items on your credit report. Let's take a look at that. The FCRA, or the Fair Credit Reporting Act, limits the length of time a negative item can remain on your credit report, while positive and neutral items are usually reported indefinitely. Plus, the amount of damage each negative mark causes on your credit fades little by little over time. That means your bad credit can last forever as long as you start implementing some positive behaviors. Negative accounts can successfully be removed from your report before the usual time limit, although it's not always possible depending on what your situation is. You might also prefer spending your time getting newer negative marks removed since older ones drop off sooner. Let's look at each type of negative account you may find on your credit report and how long you can expect them to stay there if you can't or don't try to get them off. First, let's start with charge-offs. A charge-off occurs when a creditor decides a debt is not collectible. Rather than carry it on their books as an overdue or past due debt, they can instead eliminate it from their reportable past due accounts. By charging off the debt, the company's account receivable report improves. However, that doesn't mean the debt has disappeared. In most cases, the debt is sold to a debt buyer who pays pennies on the dollar for the face value of the debt. Now, by purchasing the debt buyer can now attempt to collect the amount owed plus court fees, interest, late charges, and even more than that. By contacting the debtor and taking them to court for the full value plus any applicable fees. Now, charge-offs can remain on your report for up to 7 years plus 180 days from the original date of delinquency. The next thing that can stay on is collections. Collections are complicated because paying them off actually end up hurting your credit score by resetting the start date from when it was reported. Before taking action on collections, listen on to find out how to navigate these murky waters. Like charge-offs, collection accounts may be reported for up to 7 years from the date you first fell behind with your original creditor. Let's talk about late payments. Even if you eventually catch up on what you owe, any payment that is more than 30 days late can appear on your credit report. However, some creditors don't report the past due payment until a second payment is owed because they don't want to upset good customers who simply forgot the deadline and made it up the following month. Credit reporting rules do require that after a second payment is missed, all past due payments must be reported. Delinquent accounts may be reported for up to 7 years after the date of the last scheduled payment. Let's talk briefly about bankruptcies. Bankruptcies may be reported for no more than 10 years from the date you initially filed. If your case was dismissed, the 10 years starts from the date of dismissal. The amount of time also depends on the type of bankruptcy that you filed. Chapter 13 bankruptcies stay on for only 7 years, while Chapter 7 bankruptcies remain on your credit report for the full 10 years. Let's discuss foreclosures. Foreclosures may also be reported for up to 7 years. Luckily, you don't have to wait that long to buy a new house once you regain your financial footing. You could qualify for a mortgage as soon as 2 years, though sometimes longer depending on the type of loan. Next are judgments. So judgments may be reported for up to 7 years from the date the lawsuit was filed or until the governing statute of limitations has expired, whichever is longer. Now, most statutes of limitations are shorter than 7 years, so that is the likely maximum time a judgment or lawsuit will show up on your credit report. To be sure, check your specific state laws for details. Repossessions. Repossessions may be reported for up to 7 years also. It's worth noting that regardless of whether it's listed on your credit report, you're still financially responsible for any remaining debt after the property, such as your car, has been repossessed. Tax liens. Under federal law, unpaid tax liens may be reported on your credit reports indefinitely. However, the credit bureaus could remove them after a decade or so. Paid tax liens may be reported from the date of payment for up to 7 years. So, now are you ready to repair your credit? Let's move to that phase of this video. Let's begin with the do-it-yourself method for credit repair. Now, do-it-yourself credit repair is certainly possible without hiring an outside company like mine. Before you do, though, familiarize yourself with the Fair Credit Reporting Act, or FCRA, so you know your rights when dealing with the credit bureaus, creditors, and even collection agencies. Now, I'm going to give you some step-by-step instructions to learn how to identify negative entries like late payments, delinquent loans, and other things that might be on your report, and give you the best chance for getting them eliminated from your credit report. Let's start with step number 1. You need to access your credit report. Hopefully, you've already accessed your credit reports from Equifax, Experian, and TransUnion. If not, this is your first step. It's free and easy when you go to annualcreditreport.com. All you have to do is enter in some personal information, answer a few security questions to verify your identity, and then you can download all 3 reports in a matter of minutes. You can also request for hard copies to be sent to you in the mail if you prefer. You can call 1-877-322-8228 to get those hard copies. Step 2 is review each report carefully. Once you have your credit report in hand, you should check them for accuracy. It's important to note here that all 3 credit reports aren't necessarily the same, since some creditors and lenders only report to 1 or 2 bureaus, as I stated before. Now, even if they do report to all 3, one credit bureau may make a mistake when entering your financial history. So it's vital that you look at all 3 with a fine-tooth comb instead of just assuming that the information is the same on each one of them. So, what exactly are you looking for? I'm going to tell you. First, just make sure your basic personal information is correct and that no other person is listed on your report. Then carefully scroll through each page and look at all of your account information. Now, you're checking to make sure there's no one else for identity theft purposes. From the opening date of your account to the highest balance you've had, note any sections that look incorrect, especially if there's a negative mark like a late payment. You also want to confirm that you own each of the lines of credit to make sure no one has fraudulently opened an account under your name. Again, identity theft. So once you looked at all your open and closed credit accounts, pay close attention to the negative record section of your report. Here you'll find any accounts you haven't paid as agreed, any collections you have, or public records that you've had. Anything listed in this section causes the most damage to your score and should likely be on your list of items to try and get removed. Let's move to step number 3. File disputes and requests to have negative items removed. If you find any inaccurate, untimely, misleading, biased, incomplete, or questionable information on your credit report, it's both your right and your responsibility to dispute the information and get it removed. Plus, removing negative items can also have a huge positive impact on your credit scores. While many people still don't realize that it's possible to have them removed, there are thousands of consumers successfully disputing such items each and every day. It's actually easier than you might think, and also a much better alternative to simply waiting years for negative items to drop off your credit report. Now, what I want you to do is start off by mailing a certified letter to the credit bureau that is listing the negative item. You can easily find sample dispute letters online. Keep a copy for yourself and make sure you select return receipt so you have proof that they received your letter. Now, from that point, the credit bureau has 30 days to respond to your request. If you order your credit report from annualcreditreport.com, they have an additional 14 days to respond, making it a total of 45 days. So make sure you know about that and think about that. Now, some people will tell you that you can dispute online, but I found that people get much better results disputing through the regular mail. In your letter, make sure you detail all the incorrect information in your credit report. If you have supporting documentation, include copies of those. Don't give them the originals, only use copies. but it's not necessary to include supporting documentation. It's not required. Remember, the burden of the proof is on the credit bureaus and creditors reporting the information about you. Also, be sure to include your name, your phone number, and current address. Use a polite and professional tone without injecting any personal opinion. You can either list the reasons why you're disputing or simply state that you wish to dispute it. Now, once you request a dispute, an investigation is required by law, and the relevant creditor has to provide proof of the item's accuracy. You might have to go back and forth several times between the creditors and the credit reporting agency. It can take a lot of time and effort, but the effects on your credit could be well worth the effort. Now, let's look at how to improve your credit score by removing those negative items. You can still improve your credit score even if you can't get any negative items removed, or if you decide to wait for them to fall off your report naturally. It's also important to handle collections with care so that you don't mistakenly reset the date of the statute of limitations. Now, I'm going to give you some steps as part of your comprehensive credit repair strategy to make sure you take advantage of all the opportunities and avoid unintentional setbacks that can cause lasting damage. Now, first, assess your accounts and collections. I want you to start off by looking at your recent collections. They have the most impact on your credit because newer debt is weighted more heavily. Also, pay attention to the type of debt that you're paying. Now, your medical debt doesn't affect your credit as much as other types of debt, so focus on any non-medical debts first. Try to make full payments since partial payments can reset the time limit for how long those accounts can remain on your credit report. You can also try to negotiate a settlement with the collection agency to pay less than what you owe. Just realize that you may have to report the amount that was dismissed as income on your tax return, which could result in higher taxes and even a higher tax rate if it bumps you into another income bracket. Another issue with paying off debt collection can occur if the collection agency acts as if you haven't made any payment at all. Avoid this scam by getting payment agreements in writing and keeping copies of all documents related to the account. Next, you need to continue to monitor your credit. Once you've taken care of your accounts and collections, make sure those changes are accurately reflected on your credit report. It may take a month or two for the accounts to drop off, so wait several weeks before checking your report and your credit score. If you don't see any positive changes or the negative item is still listed, you should file a dispute with the various credit bureaus. As long as you kept good records, you should have all the appropriate documentation you need for a quick dispute process. Let me give you a few quick tips for repairing your credit. Getting negative items deleted from your credit report can have dramatic results on your credit score, but it's a process that can take a lot of time. Now, if you're looking for quick improvements, there's still a few strategies that you can actually employ. Some are small fixes, while others can have a big impact on your credit. So I want you to listen to the whole list to see which ones you can try today to fix your credit. First, lower your credit utilization ratio. Remember that credit utilization ratio I talked about earlier? The closer you are to maxing out your cards, the lower your credit score is going to be. So it makes sense that paying down your balances on your credit cards can lower your ratio and increase your score. Focus on maxed out cards rather than those with low balances. By doing this, you can see as much as a 100-point increase over a period of just a few months. Next, request a credit line increase on credit cards. If you can afford to pay off extra debt to decrease your credit utilization, you still have a chance for improvements. Call one or more of your credit card issuers and request an increase on your credit card limit. You don't want to actually charge any more than you already owe. You simply want to have a higher limit so that your existing balance consists of a smaller percentage of your available credit. Here's an example. Say you owe $5,000 on a card with a $10,000 limit. You'd be utilizing 50% of your credit. But if you got your limit up to $15,000, then your $5,000 balance would only be utilizing 33% of your credit. You see, that's better. Now, when making the call to your creditor, it helps if you've submitted regular on-time payments throughout your history with them. More than likely, they'll value customer loyalty enough to help your credit line. Next, become an authorized user. Building your credit history takes a lot of time, but there's a shortcut available. Find a close friend or family member who has long-standing strong credit and ask to become an authorized user on one or more of their accounts. That credit card account will automatically be added to your credit report in its entirety. There's a bit of risk involved with this move though. If your friend or relative stops making payments or carries a large balance, those negative entries will be added to your credit history. Likewise, if you rack up extra balances and don't help make any payments you're responsible for, the other person's credit is going to be damaged. This can be a great tactic, but it does require some caution on your part. Next, consolidate your credit card debt. Another way to repair your credit is to consider getting a debt consolidation loan. It's basically a type of personal loan that you use to pay off your various credit cards, then pay a single monthly balance on the loan. Now, depending on your interest rates, you might be able to save money on your monthly payments by getting a lower loan rate. Shop around using pre-approvals to see what kind of rate you qualify for and how they stack up compared to your current card rates. Even if you break even on your monthly payments, your credit score will still see a boost because installment loans are viewed more favorably than revolving credit. Next, think about getting a credit builder loan. Smaller banks and credit unions often offer credit builder loans to help individuals repair their credit. When you take out the loan, the funds are deposited into the account that you're not able to access. You then begin making monthly payments on the loan amount. Once you've repaid the entire loan, the funds are released for you to use any way you want. Now, it may seem strange to make payments on money you can't even spend, but it's a way for the financial institution to feel protected while you get a chance to prove yourself as a responsible borrower. Once you've successfully completed your payments and received the money, the bank reports your payments as on time to the credit bureaus to help your credit score go up. Let me talk about how to maintain your credit health over time. If you've taken care of all the items from your financial past affecting your credit, it's time to look towards the future. Now, I'm going to give you some tips to get you started maintaining that increased credit score so that you don't fall back into old patterns. And many people do fall back into old patterns. First, I want to tell you this: stick to a budget. Living within your means is one of the most important ways to keep your finances and your credit on track. Even if you're good at making your payments last each month, make sure you tuck in a portion of your money away in a savings account so that you can take care of any financial emergencies that might pop up. Avoid putting extra expenditures on a credit card because it's more difficult to monitor how much you're actually spending. Instead, check your bank account each evening to see how you're doing, or even use the all cash method to prevent tempting yourself with impulse buys. Next, pay your bills on time. You now know that the biggest part of your credit score hinges upon how timely you are paying your bills each month, particularly those that are likely to report the information to the credit bureaus. And just a single late payment can cause your score to take a serious nosedive. Get out the calendar and start organizing your due dates so you know exactly what you owe throughout the month. If you need extra help, set up automatic payments through your bank. Next, use a secure credit card responsibly. After getting your monthly finances together, it's time to start thinking about further complementing your credit with a credit card. Now, if you have trouble getting approved for one, consider signing up for a secure card. And I have one on my website that you can sign up for. It's specifically designed for people recovering from poor credit. It works by you making a security deposit in an amount that serves as your credit limit. You don't pay for your monthly balance out of that fund. It simply serves as collateral as you start to make payments on time. Now, you might start off with a limit as low as $500, but over time, you can work up to the higher limits and eventually get rid of the secured card altogether. In the meantime, you build up a new history of positive payments regularly reported each month on your credit report. Now, let me discuss how else you can get credit repair help. When you feel intimidated by repairing your own credit, there are resources that you can use to get help. Some are free, while others cost money depending on the services that they provide. I am one of those services at Comprehensive Credit Repair. Whichever you choose, do your best to fully research the company or organization to make sure they have independent positive reviews, and always keep your best interests at heart. Let's talk about consumer agencies first. One of the biggest obstacles when it comes to credit repair is misinformation. If you want to be sure you're getting valuable information that you can trust, you need to find reputable sources like mine. Luckily, there are several agencies that can help point you in the right direction. Of course, you can look at the Federal Trade Commission. The FTC is in charge of protecting your consumer rights. This government agency offers information on credit and credit repair, as well as tips for individuals who want to hire a credit repair company like Comprehensive Credit Repair. Because the FTC investigates thousands of fraud claims involving credit repair, they take an extra cautious stance when it comes to credit repair companies in general. The Better Business Bureau is another consumer advocacy organization, but it is not a federal agency. They do, however, collect information on both local and national levels about all types of companies, including credit repair companies. They also provide free resource pages that cover various tactics on how to manage your credit and get yourself on track. Now, both of these agencies provide information on free credit repair, but for actual free credit repair help, that is to say advice, you will likely need to turn to additional sources. Let's talk about some free credit consultations. Many credit repair agencies like myself offer free credit help, at least in terms of initial information to get you started. It's common for me and these other credit repair companies to offer free initial consultations. I do that on my website, as well as websites full of free downloadable documents to help you on your path to increase your credit score. Now, this is typical of most reputable businesses. You get personalized advice on your individual scenario, along with how I recommend you to proceed. In addition to providing you with an action plan, a real business trying to help you won't ask you to sign anything until you're ready. Now, feel free to get consultations with more than one credit repair service if you need to, so you can compare the strategies and prices and pick the one that feels right to you. Let's talk about accessing information from specialized bureaus. So once you get your credit report in order from the 3 major credit bureaus, you may want to think about reviewing your files from specialized credit bureaus. Bet you didn't even know about those. So the information on these reports may or may not be relevant to you. It just depends on your financial history. Now I'm going to give you a brief background on each one to give you an idea of other places that might impact your credit worthiness. First, we have something called ChexSystems. That's CHEX systems. You might be listed in ChexSystems if you had trouble with a bank account in the past. You could have had a checking or savings account closed due to excessive bounced checks or insufficient funds, unpaid negative balances, or other issues. The next time you go to open an account at another bank, you'll likely be denied if you're in ChexSystems. In fact, 80% of banks use this as a criteria for the account approval process. You can access your ChexSystems report by contacting them at the address I put below in the description. You can also go to ChexSystems.com. Next is the Clew Report, C-L-U-E, the Clew Report. Remember that game Clue? Now, you may not have knocked out Professor Plum in the library with the candlestick, but you still might have a Clew Report. This agency tracks your insurance history and any claims you may have filed in the past. It covers both auto loans and personal property claims and is used by insurance companies to determine whether or not they want to offer you new coverage and how much they're willing to provide you. If you have a substantial history of claims over the last 7 years, they may be hesitant to offer a comprehensive insurance plan. To find out what's in the Clew Report, again, just go down to the description and I'll give you information for finding those. Next is judicial judgments. If you've had any type of civil lawsuit, tax lien, bankruptcy, or other judicial judgment, you can access all your public records from courthousedirect.com. So rather than going to multiple locations in different cities and states where you've lived, you can instead order your public records from this one spot. I recommend that. Next is your utilities history. When you go to sign up for utilities at a new home or apartment, your previous history will be checked against the National Consumer Telecom and Utilities Exchange, NCTUE. The utility company can see if you've had a history of delinquency and decide whether or not to provide you with service. You can access your own utility history at NCTU as well. Next, we have rental background. Many landlords also do a background check when selecting their next tenant. Sometimes they do this as a soft pull on your credit report. They may also access your rental history through a service that specifically screens renters for information like evictions or criminal records and identity fraud. CoreLogic is one such company providing this service to landlords. Next is medical insurance history. Finally, the Medical Insurance Bureau tracks your medical insurance claims. This helps future insurance companies find out what kind of health background you have and determine the risks associated with taking you on as a customer. All right, everybody, I hope that this has been very, very comprehensive and very helpful for you. I know it's long and I have a lot of information here, but if you want to get your credit in order, this is the way to do it. Another way to do it is to work with me. I am a professional credit repair specialist. You can go to comprehensivecreditrepair.com and let a pro do it. I know how the credit agencies work. I know how to dispute your credit. And instead of spending all that time doing it yourself, I can do it more efficiently for you. So go right down and check out my page, www.comprehensivecreditrepair.com, and I'll see you on the next video.